Record. Ta-da. All right, here we go. Hi, Steve Hodgson, Modern Asset Management, December 28th, 2022. Happy holidays, everybody. We're going to talk about some basics about seller financing and how notes work with a calculator. And then we're going to talk about a particular deal that's in front of us and see where we go from there. So I'm hoping to get questions. Dave Putz is here, so I'm sure we'll have some dialogue. And the Dacia is going to be hot seat for a minute. So creating a note is one thing. What's the value of it is another. It's not always the face value. It almost hardly ever is. And time is a big indicator that goes on. Does everybody have a calculator that looks something like this? If you don't, this is an online app based on the HP 10BII or 10B2 financial calculator. I did not know how to use one of these until I was in my late 50s. I believe it cost me millions of dollars not knowing how to use this calculator. And I really only know how to use the 5 buttons at the top. I still go to Excel to do internal rates of return and irregular payments and all that kind of. I have this on my phone. I have a couple of versions. This is on my computer, and it's a big deal. So if you don't have one, get one, because that's what we're going to be using to talk about it. So I talk to lots of investors or people that want to be investors or people with small IRA accounts or people like me that got just punished in the stock market again and again and again. And I've found that myself personally, I like fixed income better than I like the S&P 500 or small cap stocks or any of these things that are completely out of my control. If I'm buying and selling notes, if I'm collecting them, if I'm helping make them better by improving terms for both sides, then well, at least I'm keeping busy. So you can make pretty steady 10+% in notes. My experience with a fairly low 36 loan modifications I bought a half a dozen years ago is after you deduct all of the heavy fees when things go delinquent, I probably wound up with a 7% return. Still, that's okay. It was, for a while it was sending me a check of $10,000 a month, and I can't argue with that. But what could go wrong? I live in the San Francisco suburbs, and prices went down 11%, boom, in a month. At least that's what the Chronicle and the Wall Street Journal and all the real estate sites are screaming. Was my market overinflated? I sold a house 12 years ago, just before the crash, bottom, for almost $1 million, and that house recently traded for 2.5. So I can't tell you what home values do either, because look what I just did, right? So what else can go wrong? Hurricanes. We've had a fair amount of experience with hurricanes. I am enamored with Southeast United States for migration, for affordable housing, or just plain and simple, it's so much easier to do work there than in California. And I can buy a whole house for $50,000 or less and make a decent return on the note, or as the landlord, or as the funder for the landlord. Or you could have terrible things like the water system failure in Jackson, Mississippi, which has been going on for years. And I saw it's on this list today because the EPA is suing Jackson, Mississippi for a failed water system that the federal government promised to fix and never did. So there we go. So what can we control? This goes back to I can't control the price of General Motors or the price of Tesla. Um, but I know what a well-maintained property looks like. I know what a good property manager does. I ran a property management business for a number of years. There is such a thing as a good Section 8 tenant. There really is. In some places, those Section 8 cards are really hard to come by. The demand is a lot higher than cannot meet the need. And so people, if you pick the right tenant, they know they've got a winning ticket, and they're not going to ruin it. On the other hand, I've managed Section 8 in down in Palm Springs, and that was nuts. But anyway, and for me, the most important thing has been the partner. And I see Lolly, my partner in Pensacola, Florida, is there, and LaDacia, and I've known Dave for a while, and John Drasba. You're always here. I'm so glad you're always here. Thank you. So I'm going to, I'm going to back up a slide. And I'm going to leave the share, and let's go play with the calculator a little bit. We're going to do some basics. And share. Dave, where did my bar go again? There it is. There's my bar. We're going to do some basics. I'm going to talk about balloons, and I'm going to talk about interest only, because I'll start at the fringes of what we're doing. So let's say, and I'm going to use pretty close to real world numbers. And I'm going to do a 12-year note. Oops. 12% for $50,000. And I'm going to do it interest only. Yeah, 12 months, 12%, $50,000, $50,000 out. A nice even $500 a month, right? Simply 1% a month. So we see how that works. So that means that there's a balloon at the end of the year. If we made this 2 years, 24 months, I still get the same payment. I still have the same balloon. Right? And so let's say that I didn't want to sell the payments. I didn't want to sell the $500. What I wanted to sell or find out what the current value is, so the net present value of the $50,000. So what if I thought 18% was the going rate to sell this balloon? I'd get the note being worth $41,800 today to an investor that wanted to wait a year for an 18% return. If they wanted to wait 12, if they were willing to accept 12 months, if it was well secured, if there was plenty of equity, then that might be all right. And then maybe this $50,000 would be worth $44,000. So there's a little example of the time value of money. Like we said, sometimes things go wrong. If you were that note holder and this stretched out for 3 years, well, there'd be some interest coming in. But if you wrote that note poorly, where your 12% interest was all you ever got, that note would drop down to $35,000. So keep in mind that that note gets chewed up over time. If inflation continues to do what they're doing, 12% probably isn't going to cut it. Maybe 15 is what makes it work. Maybe that's a renegotiation on that. Brings that note value down to 31. And we just keep chipping away at what this future value, at what the future value is. $50,000 today is worth a lot more than $50,000 tomorrow. We've seen that in the last year, right? We've gone from $3 gas to $5 plus gas in California right now. We were at $6 for a minute. Excuse me. Pardon me. So I'm gonna go put this in a little bit different. I'm gonna say this is fairly close to a note that LaDacia and I have. Well, we put in $50,000. Let's say we took let's fix this, 12. Yeah, 12. Okay. So no matter how long we go, everything stays constant as long as that payment's being made. Okay. But if you're going to sell that, including the payments, you start to chip away at what the money cost is, So we think about points, we think about all manner of that kind of thing. So I wanted to touch on balloons and interest only. Everybody in class with me? Nobody's asleep yet? All right. It's late for LaDacia. She's getting tired.
But
So,
I'm sorry, I don't mean to interrupt you, but when
no,
I put those numbers in, mine didn't change. The I think this is present value.
Mm-hmm.
Stayed at 50,000.
Okay. Did you
And
change?
then
What did you change your I to?
the interest is at 15.
At 15. So you have 24, 15. Well,
15.
just for fun, change your interest to 9 for a minute, just so that you can see if you get a different number.
Okay, so I have 24, 9, then I have in the present value $55,639.41.
And you have a payment?
Negative 500. And then the future value is negative 53.
Okay, change your to negative 50,000. Your
Okay.
present, your future value. So this is saying that if I held a 9% note for 2 years, if I lent somebody $52,736 at 9% with a $500 a month payment, at the end of that time, that person would still owe me $50,000. So they would have paid down $2,736 of principal.
Mm-hmm.
Right? So what I use often is I'll go 120 months and I'll want to get to 0. And that says I have to lend $39,000 to get it to pay off. If I'm going to lend $50,000, the payment's got to jump to $633.
Mm-hmm.
So LaDacia and I share a common practice that was taught to me by Pete Fortunato, Gary Johnston, Vina Cox-Jones talks about it, all the old timers, where I'll set a rent payment. I want to set the note payment to something that the borrower can afford. So in the case of an investor like LaDacia, the best that she can do to have that property break even is pay half of the rent, right? So this is too high, right? Because this Adele is not going to rent for $1,260 a month, right? But anyway, so before I'm getting ahead of myself. Did you stay with me on numbers?
Yes.
Okay.
I'm there now. It must have been something I put in wrong.
Yeah. And that's right. And the the three buttons that I use every time I turn the calculator on, whether it's the one of the couple sitting back there behind me, I will press help, N, and FV, and clear out the register.
Okay.
Because sometimes I'm putting stuff in memory. Right.
Mm.
So I'll say, oh, well, what if it was $500 a month? Oh, what if it was $450? What if it, and next thing you know, I'm just, forgetting. Right.
Yeah.
And it's like,
Okay.
and particularly since from here, I will plug things into a contract, we probably want to do it twice, right? And so this tells you, always check the other party's numbers. I'm honestly not trying to cheat people. I just get stupid sometimes. Right? So we're gonna get to
Hey,
Dave
Steve,
in a little
can
bit.
you,
Yes.
I'm curious, can you reverse that? Because, I mean, I use Excel spreadsheets, of course, but I'm curious, because when I put in the payment number you put in, I get a different PV on it, oddly enough.
So
Go for it.
did you grab, so there'll be a slight difference whether you're using begin or end. And I don't know how your Excel is set up, and I think I'm set up to beat for begin where I start charging interest day one.
Yeah, I'm at, I believe I'm a begin as well.
Okay, so we should have the same numbers.
Yeah.
So
I
let
was
me see
curious
if I
about that.
let me see if I have an example here. So here's something we're getting into. So Ladesha, can we talk about Adele for a little bit?
Sure.
Okay, so we're going to talk about Adele and like it's a fictional thing, right? This isn't real. This is, except I just wired money today.
Oh yeah, it's
Sound
real.
good, Steve.
Okay, so I sent $20,700 to the title company today to buy a house that needs serious work. There'll be about $3,000 in closing costs. So now we're at 23. It's going to need $20,000 in an additional rehab, and that money will be lent probably from my HSA. So we're going to be all into this. And there's $10,000 for an emergency roof repair we did last year on another property, right?
Yes.
Okay, so we're going to roll all that into this for $53,000. So I'm going to be in for $53,000. And Lolly knows some of these deals. Lolly, this is Lincoln. All right. So if Lolly wants to know why Lolly is this beautiful little dog in the corner there. Hi, Eric.
Hello, sir.
Hey. So
It does sound a lot like Lincoln too.
it's the same. Yeah. Oh yeah. Right. Yeah. Lincoln was what 30, 31, and then another like 17 or something. Yeah, we came out about the same kind of number. And that was a solid concrete little cute square in Pensacola that just got a tenant that did not love it. It was just so sad. Eric worked so hard keeping that thing pretty. So anyway, so let's say that I'm going to lend Ladesha for a year, $53,000. And at the end of the year, she's going to give me back the $53,000. Ladesha, I would never do this, but I'm doing this to set up before we get greedy. Right? So can Adele support that payment? Can
Yes.
Adele, so Adele can pay for itself. All of you that are partnering with people, Dave, all of the people that you help, always make sure that the tenant can pay the bill, right? Not the contractor, not the investor, that the tenant can pay the bill. Because then you've got two debtors. You've got the tenant and and Lolly. But Steve being Steve and not being a charity, I need to get paid. So I pull out of the air a discounted number of I'll take the payments and then $10,000 on top of it for my trouble. That seem okay?
Right.
Okay. Does that seem okay?
It's right. It's okay.
Okay. That's okay. See, we just had a negotiation. Those of you that are new, That's all we have to do. We have to be able to do win-win or no deal. Right? That's Stephen, I think that's Stephen Covey. Win-win or no deal. We have to be happy if we both win or we don't do it. Right? So
Mhm.
I'm going to plug my $63,000 in there.
Mhm.
So, and don't show her what happened to the interest rate. Right? That's highway robbery. Right? But I'm going to do some things to make sure that the tenant can pay the bill. I'm not going to start collecting my interest payments until after the tenant's been in place for a month. And that's where the on-the-ground partner becomes the most important. Lolly, have you ever finished anything before it was supposed to be done? LaDacia, has everything gone perfectly from day one?
No, no,
No.
no.
Come on, we almost always finish early.
Right? Right? Right?
Not.
And yeah, and we've been doing a lot of land financing, and I've been taking some of the lessons that I've learned here, with doing houses with you guys, is why are we waiting until it closes to go out and do my videos and my drone footage and photos and all that stuff? Once it's in, I could sit in title for a month to close. Get somebody out there, get it on the market right now. Time's money. But anyway, so this is magic. If LaDacia got the property and got it resolved in a year, which means everything had to go right, then I would have this return. Our experience was 15 in another transaction, which chips it down a little bit. Still better than putting money in the bank, right? And since I'm doing this out of a retirement account, I'm not paying any income tax on it, because I'm old now. But if we went down and said it took 18 months and we were still scrabbling to get this thing done, there was, now it's really a problem. Maybe I'm not happy waiting this long for this, right? For this $441. So there'll be some difficult conversations as we go through that. One of the ways that you can protect this is with cross collateralization against a better property. You can just add if I added the payments onto the end, I went like this. I'd go here if I didn't collect any payments for 18 months. Right? And this number is probably, I hadn't done this calculation, is probably about what the fair market value of that house is going to be when you're done with it. That'd be about right?
Right.
Right?
Seven.
So that means that LaDacia would be into a property with no equity position at all. So if things go on time and we're paying $440 a month, we're down to $63 and change. And if she finishes it closer, we're down to 61,000. We can fiddle around with this thing, all kinds of different ways. Oh, I have to put that back, to 12. So 60. So the point being is if it's 63,000 at the exit and the house is worth 73,000, LaDacia wins $10,000 too, right? I get a $10,000 bonus. She gets a $10,000 bonus. And I do that with a contract that looks like this. Where'd she go? Oh, it's back here.
So at that point, there would be $10,000 equity in the house, right?
There should be 20,000 because we started at 53,000 in, and I'm going to get 10, and you're going to get 10.
Okay.
All right, so let me see. I want to open that one. I want to open. Oh, Nope, 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 nope. Ha 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 ha. What I just showed you there is what happens when you don't pay me. Uh, no. Um, so this is a note that we did. It's in my the Quest is holding it. It was $40,000 at 12%. We had $400 interest only. And we come down here and we talk about it being an equity participation note. And we said somewhere in here, oh, here, we said right here, as additional interest, 50% of the equal to 50% of the profit of the gross sales price, less the outstanding balance due. Right?
Mhm.
Right? And so that's the win-win or go home that I like.
Mhm.
I like halvesies. Can't argue with that. Right.
Right.
Unless you can turn it faster. If you can buy stuff ready-made go, well, then I don't have to wait, so I don't have to be so greedy.
Mhm.
Right? Right.
Mhm.
And as we develop our businesses, you don't have to take all the cash. You can have some cash in and be part of the part of the prop, both sides. You know, you didn't buy, you know, at minimum, you put 3.5% down on your house purchase. Well, why not have people do that in these deals, right? So I regularly am asking people to contribute 10%. I just want people to pay attention. I've had a couple of small deals that have just languished on market because it's just not important to the person on the ground. We did 17 different partnerships this year. I think it's 17 or 18 different partnerships, and more than half of those people were done. We did okay. It was all right. It was fine, but we're just not the right emotional mix, not the right. It's just let them go to somebody else. But the half a dozen real winners that matched up to us, we have weekly calls sometimes. You know, like a couple times every couple of weeks we get together. We'll talk about ideas, and it's community. I mean, I'm now just being the bank for people that they're part of my life, and I'm part of theirs. And Ladecia is one of those, and Wally's another. But so that's pretty much the pitch. I wanted to talk about what eats up return. Time eats up return. Overruns eat up the return. When you put loans with a servicer and they go delinquent, I've been paying $90 a month for a bankrupt account since 2018. $90 a month for a bankrupt account that has not made a payment since 2018. Finally, 4 years later, the bankruptcy court lets us foreclose. Now I have to go through the whole process of taking the property, selling it, right? Does anybody want a duplex in Philadelphia?
No, thank you.
Right? Well, apparently I'm going to be the high bidder at $47,000.
Well, congratulations.
Right. Fixed up, it's a Ladecia deal. It's worth at least a double. But I'm not going to Philadelphia. So some wholesaler is going to get a heck of a deal. Some local investor is going to be I'm going to be their new best friend. But that was part of a pool that I bought. That pool I bought through those of you that have been on other calls, I bought those 36 notes from a fund out of Phoenix, and I cherry picked. I got to pick, out of 150 that were being offered, and I picked that one. And oh well, That's not the only stinker in that bunch. So, but so that's that. The since we're privileged, poking at Dave, since we're privileged to talk to Dave, I sent you over just a little bit ago. I sent you over a land deal, and maybe you can talk to me about, so I'm gonna have a $63,000 balloon note due in 18 months. What's it worth in the marketplace? It is 100% loan to value right now. When we start this, it'll be 150% loan to value, but it'll soon be par.
So I'm just looking at the email actually now. The problem is when you're buying at par is if anything ever goes wrong and I have to foreclose, my value goes down because I'm not gonna get the full dollar amount in the back end. I don't care if it's at 15 or 18%, I'm not gonna get the number return to me, because if something goes negative. So I would never pay 100% if anything, for the fact that the chances of a default is always there.
And I'll agree. Federally backed housing mortgages sell for 103%. The world that we are in is not that world.
I get you, and I know people who pay the 103, but they buy a bucket full of notes at one time with the opportunity that they can get that return when they have 2% capital.
That's right. Their cost of money, even their cost of money at 5, is better than anybody on any of these calls and any chat will ever be able.
Yeah. So for those who are on the call, the fund that was around when I first got started back 2010, they were at 2.6% on their money. So I don't care what you're into. If their loans are above 2.6, they were making money.
Yep.
So even at 3.5 or 4.0, they were making. They can buy it 100% and still make money on it. So, yeah. One thing I would add, I mean, I would love to see more people doing, and we're having calls with like underwriters. We're seeing more seller finance notes actually be created with servicing fees built into them, which is astronomically awesome and something bank notes never have written into them, which helps us buy notes at such a bigger discount or less discount for that matter, because I don't have to worry about that.
I've been adding
Awesome.
$20. Is that too much? Too little?
I think too little. I know that the standard from according to call Denver is 35. I think that's still house cost on home key. But you go to Ally, it's 18, but I'm hearing 35, but I've also heard people say do 35 and then substitute change depending on what the servicer fee is. So, but even at 20 bucks, it still helps. Because even if your service fee is $35, it helps out with that cost of what that fee may be.
And it's not just fluffing up the note payment. There's work in this. There's
Yes.
if you're self-serving, there's a
passive.
lot of work. If you've got it sitting at FCI or Allied at $18, they're doing something. They're producing reports, mailing statements, sending 1099s. There's stuff going on. And once those things go delinquent, like I said, Security National is charging $90 a month on bankruptcies. And they have a great bankruptcy department.
Oh my God, SN's one of the best. The problem is, like you said before, during COVID, bankruptcy loans kind of got put on hold, where trustees weren't paying out dollars, and you can file motion for relief and all that stuff, but when you're collecting, payment of $600 a month and then $53 arrears, I'm not going to spend $1,300 to chase $53. I want the trustee to do their business. So, yeah, I'm just reading over your email. I mean, yeah, I'm looking through some of the numbers. Yes, I mean, I can buy a lot of these notes 80%, 70%. The ones the numbers match. it works out well. I mean, right now we're seeing, we're being careful with our numbers because prime is getting up to 7.5, 8. I can't buy loans at 10% anymore simply because money is getting more expensive
Mhm.
if I'm using OPM, which most of our loans are bought with some low end OPM money. So
So if I'm a passive investor, outside of a self-directed IRA account, I'm just sitting on some cash. I
Yeah.
can put money in a treasury bill or put it in a California tax-free municipal bond and make 8% with
Yeah.
supposedly no risk at all. And
Correct.
then we say, well, look, you can get 10. Who cares? You know?
Yeah,
Who
the
cares?
2% work, it's not worth
Yeah.
the 2% work.
That's right. That's right.
Yeah, that's a frustrating part is people don't realize that, you can't ride the roller coaster up and go, well, I'm making 10, where you can literally make 8% do nothing in that world. So you really have to
But
vary
after
what
you
your
pay the
return
tax,
should be.
after you pay the taxes on the 10, you're less than 8.
Yeah, you're right. And treasury bond at 8 is tax free. Yeah, you're right.
You can buy a T-bill for 6. You could have bought an
And-
I-bond. You could have bought an I-bond for $9,000 last year.
Yeah.
Or the beginning.
And there
early
are
last
actually some companies out there, you can buy notes right now, be a lender at 10%, and they guarantee 10, which is crazy, but. So the question is, at what price do you buy notes right now? And I think people out there, I'm sure your audience knows it. You gotta be bidding at a price that makes sense to you. Because passively you're seeing at 8, 9, 10. What are you gonna buy a note for? A year ago, we're buying notes at 10, 11, and then those good numbers.
Mhm.
Now you buying at 10 is not good enough.
Right. So I've been thinking that, the new bottom number to a risk adjusted price is 13% with some sort of caveat. And like I said, we're doing a lot of stuff. Dave and I are gonna have a little sidebar here.
I apologize, guys.
So we've been financing a fairly decent sized land flipper shop that sells everything on terms. It's $299 down, $199 a month, but he's doing 10 of these a month. And we're funding those at 65% of loan value. He's insistent on doing this zero interest model because he is. So he's willing to eat the difference. He's paying 35 cents on the dollar, selling at 85 or 90 cents at retail, and then I'm in there at 65 cents. So there's a 25 point protective coverage in there for me, right? So what our contract says is that anytime that I want to give him back a loan, why would I ever want to give him back a loan? He can replace it with an equal or better loan. So he can take his default back at month 1, give me another one because he's got volume, give me another one, keep his basically line of credit open. Right? And we turn those fairly quickly. Our yield is about 25%. It's all easy peasy. And again, in those loans, the servicer's paying the borrower is paying a $20 a month loan servicing fee, right? And he's with a service that's as bare bones as can be. It's just accounting and ACH. You couldn't send them a check if you tried.
When it performs, it doesn't matter what you're doing.
Right. That's right. And it's decent accounting software, and we've been at it all through COVID. And his he's a good, he's not selling garbage, 1 acre or 1 acres in the desert or quarter acre swampland in Florida. I've got a couple of those if anybody wants them. I think they're still wet. I think they're still wet from the hurricane. So there's that end of the world. So let's go back to this fictional note with LaDacia that is can be written as an amortizing loan with a balloon. It can be written as an IO loan with a balloon. It can be written at a 12% yield. And if somebody wanted to buy just the cash flow, if I just wanted to sell a partial, what would we do with that? If I've got $440 a month coming in for, say, 18 months, that I just wanted to turn that into cash. What would your world pay for that? $440 a month for 18 months.
So me, I go back to my spreadsheet to figure out what I would pay for it if it's performing as partial. So. What would I pay for it? Give me 1 second. And I know John has a question, so I don't wanna,
Oh, does John have a question?
that's.
I'm
yeah,
not paying.
just-
I'm not paying any attention at all. Hi, John.
I got you, John, don't worry about it.
Oh, okay. See, that's what happens when you have a professional on the line. If those of you don't know,
Don't call me names.
Dave Putz and Nathan Turner
Yeah.
do weekly stuff on YouTube. They're doing great education in the note space, and they run an active trade desk with usually about 100 assets out there.
Yeah, yep, about that, yeah.
What does the borrower make? When does the borrower make these additional interest 50% payments as stated in the displayed document? Oh, I guess maybe I should take the document down.
Right in front of you, yep, I see it too, right in front of there. Says
Yeah,
borrower shall pay the note holder.
Yeah,
Additional interest.
we did a
Good
slightly
question.
different contract on this. And so what we did is LaDacia needed 90-day runtime. It was a quick cleanup in a house. She needed 90-day runtime to get the first payment in. LaDacia, I think you had somebody in there by the beginning of the second month. Maybe
Right.
it was, yeah. So it only took her like 30, 45 days to get the place shipshape. And that was
43.
including 43.
Yeah.
Okay, all right. Here, Lolly, hear that. 43 days, and she got a beat up rental back on market. All right. This is, she's the bomb.
I gotta hire her.
And part of that, well, we're gonna do 10 houses, and we're gonna sell some land. And converted a room into a third bedroom. So she turned a 2-1 into a 3-1, put a Section 8 renter in it, and the Section 8 department paid $800 a month, and I got half, and she got half. Right, but I gave her. I didn't expect payments for 3 months. And
LaDacia, come to Pensacola. Come to Pensacola, LaDacia.
She's still there. She's still there, happy.
and so she needed a little runtime. And again, I'm back to when is the tenant going to make the payment? So what did I do? I carried a little bit extra interest. Okay, that's okay. So days off there at the adding machine. I don't hear the tape going. But,
No, it's all spreadsheets, all Excel. I never could figure out the calculator because it always annoyed me the hell of me. How many payments you looking me to buy?
let's say 17. I'll take one just to make sure
Okay.
that the loan it can't come back I'll do one for payment ratification.
I mean, quick numbers without, if it's a partial kind of purchase. I did right now around 15 just for negotiations. So I'm at 24,793.
24,793.
If you do 15% yield on that, you'd get that number.
Okay. And
Yep.
so at a 15% yield. So
Yep.
so for a quick.
And if I put
think
servicing costs into it for $30, I'm at
Mhm.
22,933.
Right. So it's
Yep.
it's a quick way to move some
Yep.
money on it, to get fund the rehab or whatever.
Yeah,
And it's a common way to do these kinds of transactions. Partials, the plus side for the partial, besides the pain in the butt for the default, and we skip that, all that, it defaults to default, but the loan to value is as what did you say? It was $2,500 against a $50,000 house. that's probably gonna be okay. You know, in first position. And so,
Yeah.
we've done a lot of these where we've financed the lot purchase. And then the builder, Lolly, will go out and get a commercial building loan. And we'll subordinate to second position. Because we know that the property is going to, every month, the property is going to be worth more and more as the project gets done. That will come back and kill you if you can't afford to service the first. As I could not with a $3.5 million first ahead of me. That's, if you go back to the beginning of my videos, I talk about something there where we did I just happened to be a bill collector, so I knew how to get out of it. So I'm gonna stop that.
So answer that question with John, when does the borrower make additional 50% payment? When do they actually make that payment?
Yeah, and so Ladacia started in month number 3, and she made those payments in month 3 through 15, and then got a takeout loan for the entire amount owed. So she got a permanent 15-year loan to cover that. And again, the state of Louisiana is making those mortgage payments. Right?
I love that.
Right? Okay. Right?
Right.
Yeah.
That's a great borrow right there.
Yeah. And again, with the right partner on the ground and in the right scenario, Louisiana is not an up and coming migratory place like Florida, but people live there and they raise their family there and they stay there, and jobs are scarce, and the federal government is doing what they can, or doing what they negotiate to keep things moving along. Right. And so Ladacia's picked a neighborhood called Acadian Village. And I didn't last month, but in January, we're gonna mail every rental in Acadian Village and say, do you want to get out of this? Do you want to get out of this? Are you tired of being a landlord?
Yes.
What did you rip? What was the letter you sent today? What town was that?
That's in Bunkie. It's 30
Bunkie.
minutes outside of Alexandria.
Donkey.
Bunkie.
All right.
I
And-
like it.
And why do I like Bunkie? It's on the way to Baton Rouge, and Baton
Yeah.
Rouge is a better neighborhood than Alexandria. And
And
but
Lafayette.
yeah, Lafayette's near there, right? And I didn't know Bunkie at all until today. And why can that house support an $800 rental payment? What makes it worth that?
Because there's a lot of people that commute from Bunkie to Alexandria for jobs. And they all, it's actually midway. You can go 45 minutes to Lafayette or 30 minutes to Alexandria. So they can afford it.
Okay.
They're just in the country. I mean, we're country, but they're countryer.
Yeah. And so you may not even get a Section 8 renter there. You may get a two paycheck home.
True, but I'm going for Section 8.
Okay. All right. Well, Section 8 people also work. They don't all just sit on the porch.
Right.
So
This is true.
yeah. And so we heard, and the pickup for you and me and for Lolly is, let's make sure we're adding a payment processing fee. Right?
Okay.
When we write an agreement, when we're doing something, let's slide in a $20 or a $30 charge to cover the bookkeeping and accounting and all of that.
Mhm.
And so that's my John, thanks for that. I forget that all the time.
Okay.
Although we've been doing it more and more. We did I think we may have finished up. We have one more closing Friday. I think we may hit 40 sales this year. So it's been busy. So what I wanted to do today is get LaDacia to get her calculator out. I'm always happy to see Dave, and I appreciate everybody's paying attention. We get this stuff gets like 1,000 views sometimes on YouTube. I don't understand how, but it does. I'm not getting a million. Not a million people don't do it, but there's 1,000.
We're too boring for that stuff, for a
Oh,
million views.
goodness
But I
gracious,
would
yeah.
definitely think that, what I've found and what my focus for 2023, some of my little secrets, hopefully not a million people watch this, but is these subject to buyers. Instead of doing mailers and postcards, I'm finding, last month, we've spoken to, I'm gonna say around 60 different seller finance subject to buyers in Louisiana, in North Florida, Texas, Oklahoma, Tennessee, the whole Midwest area. Where they're buying subject to and they're actually grading the second. Where they're actually selling the second, paying off the first. And then I move to first position.
Mhm.
And instead of doing mailers to people blindly, these people are out there in these different guru educations, learning to create these notes, and then we just step in and buy them, cash them out, refi them, and then they're in a spot where they can go buy more. So I don't gotta teach them how to either sell or create a note. They're already doing the work.
Okay.
So I don't know if that helps at all, but
Well,
that's
it does.
my angle.
Well, it does.
Right.
Lolly
So-
and Ludacia, this is thanks for pulling us into the next
Yeah.
chapter in the book. So
Right.
let's
So-
flesh that out a little bit.
Yeah,
I can go shopping anywhere.
Yeah.
I tend to like tertiary markets because I like
Yep.
the spread of rent to property value. I'm not looking for appreciation. So I go into, we'll say, I've done some notes in Oklahoma.
mhm,
I sought out 100% equity owners. I did not seek out anybody with a loan. I can easily go into
but how about going after NMLS people and asking them? Have you created a loan recently for any investor in your local market? And if you do, can you ask them to, if they've interested in selling it? Letitia, I would connect with someone local to you and say, listen, who's underwriting these notes? And add to their questionnaire, are you willing to sell a note? And then you can skip the whole process of doing these blanket mail letters. And again, in the last 60 days, I've gone that direction. I've spoken to 60 plus people who are creating maybe 3, maybe 50 loans a year, where they're just saying, yeah. And what I'm getting it through is through this NMLS system of people underwriting them and just adding a question at the end of it. Would you be interested in selling this note? And guess what? Most of them are, and they're creating money out of thin air, as you both know, where they're maybe into the deal for 30 and they sell it for 50. They write $20,000 in cash in
Mhm.
equity.
Right.
And now they sell it to you for 40 grand. They make 10 grand of profit, and then we're buying it, right? And we can either do whatever you want to do with it. If you want to create the note, I think landlords are a great avenue to create the note with. I'm on the buying side of it, so if you guys are creating the note, we can have no problem buying it. But if you're looking to buy the note, I would hit it up the local NMLS individual.
of who LaDacia is a member.
Yeah.
LaDacia is a real estate broker and a contractor.
Okay, awesome.
So,
High five.
she's the whole Swiss Army knife.
Yeah.
So what Dave just did, LaDacia, is he tried to
Mhm.
steal you from me. Which is not true. But the point is, I've been focused on mailing 830 people in Acadian Village. And I'm going to do that because it's going to cost $500. Okay.
Yeah.
And but in there is a subset of people that are active. Just like you're buying property on terms,
Mhm.
other people are buying property on terms. We can easily find the people who have sold multiple properties, right?
Okay.
We can find you, we can find the other landlords, and we can zero in and build relationships with them. They can have my letter in the background, getting them thinking about it, or a postcard, or a phone call, or a robocall, or whatever. I get robocalls all the time. I'm on. I should not put my phone number on titles anymore. So, but there's Dave's point is, if you find somebody that can sell you at a note that you can buy a note at a deep enough discount that Dave can then go and move it out into the general world that he services, then now you have now there's another direction to turn around. The idea is if you've got somebody that owns a piece of real estate or sold a piece of real estate who has a problem, and you've got a solution, regardless of what it is they need. We can find just tell me what's wrong and we'll fix it.
Yeah.
I just wrote this $50,000 note. I don't feel real. My wife says, I don't want to wait 10 years to get paid off. And you go, wait, Dave will give me $43,000 for this note, and I'll make $7.
Think about lottery, right? The lottery's for $3 billion, right? But you get paid out, do you get paid out $3 billion in cash? No, you get paid out a whole lot discount because I don't want to wait 30 years to get my money. That same concept with notes, right? The whole calculator that Steve showed before was about time value of money. You don't get the entire balance of the note in the future, you get a discount.
Mhm.
Same concept, right? So yeah, if you were a note for 50 grand, I could buy it for 43 today. But I like the idea of creating a note, because what you guys are doing is creating cash out of thin air. You're running a paper mill
Mhm.
legally and
Yeah.
creating cash out of
Yeah.
thin air. It's
So
amazing.
here we are. We write this note for $63,000. We season it, and then we turn around and sell it.
Yep. Sell it to me, we buy it, and you go do it again,
Yeah,
over
then-
and over and over again.
Right.
Yeah, if you can do it 4 times a year, I'll buy it from you 4 times a year.
Mhm.
That's a whole
Yeah.
nother world.
And
Yeah. Yeah, it's amazing. And it's what's more amazing to me is that we don't know individuals like yourself, right? I know a lot of agents in North Florida, as well as, South Georgia. What you guys don't know is about us. And then the bridging the gap between you can create notes. Well, you can have us buy the notes on a repeat basis and be like your refinance bank. And we come in, refinance you, you go do it again and again and again. As long as you can create the note with enough lower basis that you can create a $30,000 note or a 40 or 50, and you're selling it for 60, and you have 20 grand of capital where I can buy it for a little bit discount.
Mhm.
You can do that as many times as you can do it a year and make 10 grand every pop. You can make 20% every 3-4 months and make a ton of capital. And you know what? I'm gonna say, listen, can you sell it at a 15 yield? And you say, Dave, if you do this with a 15 yield, I'm making 60 yield a year. So yeah, I can do 15. No problem. Have fun, Dave. Have fun with a little 15. I'm making 60 in a year. And I'm okay
Well,
with that.
yeah, because Dave has built a machine that he just pours the stuff in and it goes out the other side.
Yeah. We have a lot of
like
capital
I
we
did.
can spend money on.
Yeah, and so and there's we're sitting on more money than we're used to. We've been, like I said, I've been adding new I've been adding minor league versions of LaDacia and Lolly, hoping to get some of them up to the majors. But there's weirdness in the money world right now. We just we're it's you want to hire a mortgage loan closer, you can just go put an ad on Indeed and watch your inbox blow up. I was just looking for somebody to do paperwork. I was getting managers and vice presidents, and I was like, no, I just need somebody who knows how to fill out forms. And they're like, well, I can do that. And you were just left $150,000 a year job. You're not gonna like my pay scale. Um, yeah. But there's strange stuff in the world, and that creates opportunity. And to Dave's point, LaDacia, you're going to a property radar class. Was that today or yesterday? Tomorrow?
It was today. It was today
Today.
about, yeah, it
All
was
right,
good.
so Dave, I've been using property radar with, the from years ago, it used to be called foreclosure radar, and they went national a little while ago, and I can drill in and ask this question. We can write this out in an algebra question. I can drill in to property radar and select new transactions with possibly with a seller carry, multiple buyer seller, same name again and again, download, zip sort, boom, 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 and
Awesome.
we can. So if you have a shopping buy box, tell us, right? And I know we have some folks here on the phone that'll would like me to help them find stuff in their neighborhoods.
Yeah, I mean, I definitely get sent a buy box to anyone who wants to sell. It's not always what you want to sell, but if you find a deal, I mean, to Steve's point, even if you find a deal that's outside your buy box, most likely it may be in our buy box or someone we knows, and we can pay a fee for anything you find.
So you when if I'm gonna so say there's a $50,000 note and I can buy it for 40. I'm now the note holder. Do you want me to hold that, or can I immediately assign it and sell it to you for 45, 40, whatever the spread is?
So, yeah, I mean, our golden ticket price is any between $50,000 property value to 300. Obviously that's a kind of a big broad area. Depending on state, depends on what our pricing is. And we're shooting now for above 15 yield because of where we're at. But we also bid on 3 different numbers. Performing, if it's equity or not equity. So if it defaults, if I'm gonna sell at auction, if I'm gonna foreclose and have to rehab it, or if it'll continue to perform. So right now we're targeting anything with if we're looking at around 14, 15 yield targeted for a purchase price number, but we're looking for properties over $50,000 in value. We're in about 14 states, so it's hard for me to say exactly which state, but the higher the ticket price, the lower the yield we're looking for. So if that helps anyone, if not, I can be more specific, but the problem is Texas is different from New Jersey, which is different from, Illinois, because of the time frame. I can buy 4 notes in Texas in a year, where in New Jersey I can buy, 3/4 of a note in time frame.
Right.
I'm in Jersey, so I love to hate it, but
Yeah. Well,
so
yeah,
even in
and
Florida, I mean, Florida's a little different though, right? And I give props to Florida because Florida's appreciation is always going up. So even though Florida's a year in foreclosure, if I default, I can still buy in a higher yield because I know the fact that while I'm in foreclosure, my property values have to go up for the most part in Florida.
So take that into account as
Yep.
we figure these. So if I figure just as a ballpark, if I'm buying at 20% discount or more,
Yep.
I'm gonna have an exit that's gonna be worth doing.
Absolutely, yeah.
Okay.
And you can definitely throw us up and go, Dave, real quick question, what do you think you'd pay for this? As long as you give us all the numbers, we've gone through all the 5 numbers we need. And then it comes with note numbers where how many payments remaining, all the good stuff comes out. Yeah, we can pretty much give you a price within seconds.
Good. Well, there it is. We got a JKP Holdings commercial at the end. It's fantastic. right. All right. Well, it's late on the East Coast. Lolly must be tired. John, always good to see you here. Like I said, this is going to get up and saved. And Dave, if you want to put it out on your channel, we'd be glad if you did that.
Will
But
do.
I'm gonna, all right, and I'm gonna go have dinner.
Let me just mention, they did mention in the class today how
Oh, yeah.
people are the notes, people that are buying notes or using Property Radar, to search to see how many loans are on different notes and stuff like that. They're using it a lot,
Mhm.
other than just for land, purchasing land, and trying to get data for land and things like that.
I've actually never used Property Radar before. I have my own internal system that I've made public, but I'd be curious to see how they process things.
Yeah.
Differently. Be cool.
Yeah, it's an aggregation of 3,000 county records that are standardized format. They have almost 99% of the country, and it's a map and the public records and some internet connectivity, like does the owner have a Facebook page, all that kind of stuff. It's a marvelous tool. Yeah, it's Property Radar. Go. I like them a lot, and we've used Datatree and other services, and like I'm back with the Property Radar folks because I used to use them. So anyway,
Before you go, I see a quick question.
yeah, Wally's got a question.
So
Yeah. What
typically,
season?
I'm between 3 to 6 months. In this market right now, I'm leaning towards more 6. I'm gonna tell you, Nathan, who's a podcast partner of mine, webinar partner of mine, he's buying from table. So he doesn't care as much. I'm looking more 6 months now, simply because the market is very questionable. We're looking at third quarter to be a big kickback possibly. So we're looking more 6 months right now.
Cool. Thank you, sir.
Not a problem, man. Enjoy.
Thanks.
All right. Well, lively call. I'm glad we did this, and you all have a happy New Year. LaDacia, promise I'll turn some attention your way. Yeah, let's say Friday. I keep moving you ahead
Sounds
in my
good.
calendar. I keep moving you ahead in my calendar. But
Okay.
yeah. So,
Move me ahead.
all right. Okay. All right. Yeah. August Friday's closing on Adele. Yeah, we'll be paying attention on
Yeah.
Friday.
The 29th.
Okay. All right. Oh, 29th tomorrow.
Well, yeah, it's by the 29th.
But yeah, tomorrow's closing. Oh, there we are. We bought something today. All right.
Yay!
All right. Okay.
Thank you.
All right. Everybody have a good night.
Good
Enjoy,
night,
Steve.
everyone.
All right.